Now we're going to learn what goes where on the statement of cash flows. On the right side of the screen, we've got our statement of cash flows. Notice we have our three main sections: cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. So we need to know what types of transaction goes in each of these three sections. Over here on the left side of the screen, we have a summary tool for what goes where. In this first section, the most important section, cash flows from operating activities, what goes in there is net income, and it's always first. Later on, we'll find out why. We have depreciation, gains on sales of assets, losses on sales of assets, changes to current assets. Now, a change to a current asset, for example, we have a decrease in inventory and we have an increase in AR. Those are two current assets. So if those change, it goes in the operating activity section. We also have changes in current liabilities. An example of that is an increase in AP, also a decrease in AP, and an increase or decrease in accrued liabilities. Now, for now, don't worry about why we are adding or subtracting these and why we are adding or subtracting these changes in current assets and changes in current liabilities. Right now, we're just concentrating on what goes in this section. Later on, we'll get into details about what to add and what to subtract. In the second section, cash flows from investing activities, what goes in there are changes to long-term assets. For example, this company paid cash to acquire plant assets. Well, that's a long-term asset, so that goes in this investing activities section. They also received some cash from getting rid of some plant assets. That plant assets, again, are long-term assets, so that change goes in here in this cash flow from investing activities section. In the third section, what goes in there are changes to long-term liabilities. And we have a couple examples over here on the actual statement of cash flows. This company issued notes payable and received cash. So that is a change in a long-term liability, so it goes into the financing activity section. They also paid off some notes payable. That is a change in a long-term liability, so that goes in the financing activity section. We also have changes to equity. Some examples of that: we received cash from issuing stock. Common stock is an equity account. That changed, so it goes in the financing activity section. Treasury stock, we had a cash payment for purchasing treasury stock. Treasury stock, as you recall, is an equity account. Therefore, that change goes in this financing activity section. And another example is the company paid cash dividends. That will lower retained earnings, which is an equity account, so that's why it goes into the financing activity section. Now, on the next slide, we'll show you a visual representation that shows you where these go. Current changes in current assets, changes in current liabilities, changes in long-term assets, changes in long-term liabilities, and equity. Again, it's the same information as here, but a visual representation that helps a lot of students. So what this grid system is showing is it's starting off with the accounting equation, and on the left we have assets. So underneath assets we have the two categories of assets: current assets and long-term assets. Current assets, if there's a change to a current asset on the statement of cash flows, it goes into the operating cash flow section. If there's a change to a long-term asset, it goes into the investing section. Over here on the right side of the equation, we have liabilities and owner's equity. And remember, liabilities are broken up into current liabilities and long-term liabilities. So if we have a change to a current liability, such as we paid off our AP, that goes into the operating section of the statement of cash flows. If we have a change to a long-term liability, such as taking on more long-term debt or paying off long-term debt, that goes into the financing section. And if we have a change to owner's equity account, such as issuing stock, paying cash dividends, or buying or selling treasury stock, that goes into the financing section of the statement of cash flows.